Welcome back to the Real Estate Standard Podcast. This is episode 10, where commercial real estate and Bitcoin collide. I'm your host, Tim Kotzman. I'm here with Chris Drizga and Kenny Alves. Today, we're going to recap Strategy World. Chris and I were out in Vegas for Strategy World this past week. We're going to recap the Heat Punk Mining Summit in Denver, which I'm very excited to hear about because I can barely pronounce it. And Kenny is also going to tell us the latest with, is it Claw something? What is it, Kenny? Claw?
OpenClaw.
OpenClaw, yes. As I would meant to say, OpenClaw. So each episode here, we break down how serious operators, investors, and developers stay competitive and profitable in the 21st century by examining commercial real estate through the lens of Bitcoin. Before we get to all those topics, I'm going to throw it over to Kenny so he can take us through an update on West Main stacking.
Thanks, Tim. Yeah, as of today, March 2nd, our total Bitcoin holdings are just about 3.2 Bitcoin, 3.199. That's over 1 Bitcoin for the year so far. So, stacking for ants here, we're at 101 million Satoshis for year-to-date accumulation. That's a Bitcoin yield of 46% for the year. And our Bitcoin per square foot is up to 4,608 sats per square foot. And that Bitcoin is covering about 9.6 months of mortgage coverage. And then I'm excited to announce today we received our first dividend payment from our digital credit Stretch, which we purchased last month. That first payment was $1,888. And that's like the equivalent of us adding about 6.5 10 by 10 climate control storage units. And it's going to increase our net operating income by roughly 3% so far. And it's going to help us accumulate more Bitcoin through our DCA program. So, yeah, over to you, Chris. Want to get your thoughts on that?
That's a lot of really positive updates for being in a down market. I'm just looking at this dashboard, and there's a lot of green here, and again, and just considering the sentiment and the price action, and just all the negative energy. There's a lot to be really excited and bullish on here, just with this dashboard and. I mean, I know you and I are tracking this week by week, but I'm seeing, the incremental improvements on some of these metrics already. Satoshis per square foot jumps out. I mean, I think we started at 3,100 or 3,200 sats per foot, if I'm not mistaken. We're, up to 46, and that mortgage coverage was hovering in the 8-month range for a little while, and that's, eclipsed the 9-month level. So again, there's a lot to be really excited about here. And, even though we don't move as fast as, Bitcoin or the digital economy or global markets, we're, it's the little engine that could here. We're going to, it's a marathon, not a sprint. So, a lot to be excited about here. And Tim and I worked our tails off last week. We were running on coffee and a martini here and there, and just a lot of adrenaline. But Strategy World was fantastic. That was my first time attending. The True North event was excellent. That was the private event on Monday, a day before the actual conference got started, and it was the True North guys hit an absolute home run. The conversations, the topics, the audience, the questions, And then the networking dinner, or excuse me, the networking hour later that evening. I mean, it was just 5-star start to finish, and it was really cool to meet everybody in person and just further those relationships. It's like it was the first time I met a lot of the guys in real life. But your conversation starts as though you've known each other for 10 years. It's crazy. So that was really, really cool. There was a lot of good panels, like I said, but the one that really stood out to me, Tim, I'd be curious to hear what your favorite one was. But my favorite panel at True North World specifically was with Barclays. So Jeff and Ben had brought out, their guest was the guy at Barclays that is creating and building the prefs behind the scenes. And he spent a good 45 minutes, maybe close to an hour of, giving us a look behind the curtain, essentially. How the things are made, how they go through different approval processes. And that was really cool for me to see. And, you think about who's actually doing this, and, Barclays, being a 300-year-old bank, was probably not on, the top of my list of guesses as far as who's, pioneering this digital credit, Bitcoin income model. So that was really cool. And I just, that was hands down my favorite panel. Was just, again, it's kind of getting to see behind the scenes on how the sausage is made, so to speak.
Yeah, Chris, it was the first time that you and I met in person, which is almost unbelievable.
Yep, almost.
Yeah, I remember the Barclays guy saying, maybe it was a smaller deal than what they would usually work on, but that they see where the puck is going, they see the opportunity. So anytime that you have anyone that's working for fees say something like that, it's probably pretty notable because, Wall Street guys are there to make money. Of course, short, medium, and long-term relationships is kind of what they were, long-term relationships is what they were hitting on. But I mean, it's certainly important. But, a lot of times in the real world, it comes down to how am I going to buy my next yacht? And that comes down to making fees. So definitely notable that it wasn't somebody you've never heard of. It's Barclays that is saying, "Hey, we're here and we're ready to party." So yeah, that was really cool. Penny, did you watch any of it? Did you have any takeaways from any of the live stream there?
Yeah, I was able to I was having some FOMO. I'm going to be in Vegas in April for the next event there, but I was just getting over that FOMO until you guys had to share some stories. But no, I'm excited that it was such a good event, and that it was worthwhile, and that you guys got a peek behind the curtain there. Because I hadn't heard the news about Barclays. I watched the Sailor speech. I think that's the only one I saw so far. I got to catch up. There was snowstorms on the East Coast. Properties were snowed in. So I was a little busy.
Yeah, I mean, even despite the price action, I mean, there was very little talk of price action, right? I don't know about your conversations, Tim, but it was really a non-issue with the folks that I was chatting with. And I mean, honestly, I kind of prefer going to these different Bitcoin events and functions in the down markets or when price is suppressed, because the conversations are more substantive, more technical. People are getting back to, I don't want to say getting back to the basics necessarily, but you can tell there's a reason why they say that we build in the bears, right? And you can tell that comes through, right? Whether you're fundamental Bitcoin, spot Bitcoin guy, building on the base layer, or you're one layer up on this digital credit stuff. The conversations were stimulating and substantive, to say the least. So that was really good. I didn't think about price all week.
Yeah, there's something special about smaller conferences where you're not just shaking hands with somebody for 2 seconds and then 2 seconds, 2 seconds, 2 seconds. You can actually have those conversations. And to your point about building in the bear, I mean, I know Ed and I had several conversations with several people, but about business, how we can work together. Um, but it was an environment in which we could actually meet with them like more than once, like twice, 3 times, right? There's only a couple hundred people in some of these sessions. And so you can just say, oh, okay, great. I'll see you in a couple hours, or you see them the next day. And you can have, I mean, it's just massive relationship building. Whereas at some of the larger conferences, which I also love, when you have 20, 30, 40, 50,000 people at a conference, you're, if you have access to some of the smaller areas that are more restricted, whale areas, VIP areas, you're going there and you still have hundreds of people. But so yeah, it's just a different dynamic. And I mean, Chris, I know obviously you and I got to chat for a little bit. So I just think that's a really sweet spot where there's enough people that you're still almost feeling like you can't talk to everyone. Like I actually wanted to have a private conversation with Grain of Salt, and we didn't get to. So I talked to him while I was eating lunch today. But I was like, it was a smaller conference, and still didn't get to talk to everybody that I wanted to. So I think that's just a really unique opportunity.
Yeah, and Kenny, there were the people were excited to hear, have a conversation about commercial real estate and Bitcoin and how, and the prefs for that matter, our digital rent concept. So whether it was just me sharing with other people, what I'm working on, how we're thinking, how we're exploring the intersection of these two asset classes, or people telling me their own stories. There was a couple. There were two different people that were sharing with me that they're working with different family offices that they see where things are heading. Just like you, Kenny, right? They get both things. They see where the puck is going, and they're having those discussions internally of how do we utilize these new tools, right, to complement and enhance the real estate portfolio. And I say it over and over, but like the real estate world does not move very quickly at all. It's effectively a glacial pace. So and that's that's the case in these discussions as well. But the takeaway there was that real estate capital is seeing the writing on the wall. They see the new tools, the new optionality that's available to them, and they're thinking through different ways to utilize it, right? How do we use these tools to increase cash flow, to make the asset more resilient and durable, and be able to handle downturns or vacancies, that type of thing. So sometimes I know it can kind of feel like we're just on the bleeding edge of something all by ourselves in the commercial real estate world. But between the guests that we've had on the show up to now and the conversations I had at both of these conferences, for that matter, would suggest otherwise. We are not alone, Kenny, is the big takeaway. There are other crazy people out there.
Yeah, it sounds like there might be some potential guests that we have lined up for this month, or maybe we can reach out to bring them on to talk about that in the public. But it's good to know that it's happening behind the scenes. Not everybody's ready to publicly talk about it. I mean, for me, it took a decade to publicly really speak about Bitcoin because it was um, people can be very judgmental when you say the B word. And you got your reputation on the line. And I mentioned that in one of our first episodes, when with this new administration, it relieved some of that pressure. And I think it's going to take time for the people to talk publicly about digital rents and how they get this arbitrage from borrowing long term against your real estate. In the real estate world, that is it. For other businesses, it can be other ways to tap equity or the money. But the the idea behind digital rents, where you're borrowing at a lower cost than what the digital credit is yielding, the digital yield. Um, it's going to take time for people to be comfortable with that idea, and then to go talk about it, because we do sound like lunatics to to the rest of the world, the people that aren't up to date on this stuff. I mean, they have a lot of questions and concerns, and it's going to take a lot of education and a lot of proving it out, a lot of dividend payments getting paid. We received our first digital rent check this month, and just today. And so it's going to take time for people to see that it's real and not too good to be true, that it's actually a new tool um, that can be plugged into every type of business, in my opinion.
Kenny, how did it feel receiving a digital rent check for the first time ever in your entire life?
So I logged in to Charles Schwab this afternoon, or this morning rather, and I saw it there, and just to kind of reiterate on like how early we are. I mean, in like the dashboard there, it has you know wrong information. It says it's a 10% yield. The math all checks out. The payment that you received, we got the 11 and a quarter percent, which was last month's dividend, or maybe it was 11 and a half. I got to double check the math there to see was is the we just saw a raise in the dividend for stretch, a quarter point, just the other day. While you guys, it was like right after you guys left Strategy World, there was another announcement, I think. So I don't know if you guys saw that um, digital rents went up a quarter bip there. But yeah, it's kind of crazy. Charles Schwab is showing it and projecting, dividend payments like they do for other dividend payment stocks, and it's becoming real, right? Like, you can see the projections, you can see the money in the account. Now we gotta, because you can't buy Bitcoin on Charles Schwab, we gotta wire the money to our checking account, send it over to an exchange like Strike, and then we can buy the extra Bitcoin that we're going to be able to buy moving forward. So it's the whole process.
Is it safe to say that your digital rent is it's your new favorite tenant?
Yeah, I mean, baby steps. I mean, it's still like a small percentage, but every tenant matters, like we like to treat all of our tenants fair, and like this is just as good as a brick and mortar tenant. The digital tenants are just as good. We're happy to have Strategy as a tenant.
Oh, you're so diplomatic. I'd be like, hell yes, that's my favorite tenant. No headaches, no complaining. They always pay rent on time. You're my favorite.
Yeah, no delinquency calls, so you don't have to go chase the money, and it's gonna show up like clockwork. And I just think it's gonna just take time, even though the money is like literally sitting on their balance sheet, right? Like, you can go to strategy.com, you can see how much cash they have there, and the only reason they have that much cash is to pay the dividend. Like, they, at one point they didn't really want to have any cash, but because they have these preferred instruments now, there was some worry, and just to kind of silence the FUD, really, they put cash on the balance sheet, and I think that's a peace of mind that you know um, real estate investors would like to see, especially to see that, hey, this tenant is it's a AAA tenant. They have enough money to pay the dividend for years, with just in cash. Now, if we look at their assets, they're way over collateralized here. So, we talked about this before. When you go look at the hairdresser or the deli, or how many months of rent do they have covered, right? Are they like month to month, and maybe they got like a 3 month buffer, maybe they got a year, but like it's just kind of night and day here. You got like it's obviously like one of our more overqualified tenants, right? They're they're a publicly
You
traded
basically
company.
you found a credit tenant, right? I mean, that's what you're trying to say. And credit tenants are the common vernacular in the real estate community, right? Or you have credit tenants, your property's going to trade at a premium relative to those that don't, right? I mean, nothing against the delis and the nail salons and um, the dry cleaners, but that's not, there's a different risk profile, plain and simple. And it was um, the one exciting thing too. I know West Main as a real estate firm, you're a real estate operator having stretch on the balance sheet, whether we're calling it digital rent, Kenny, or calling it or talking about it in like a treasury strategy type of way, right? It's probably uh, both essentially. But at the conference, there were a couple big announcements. One was Anchorage Digital. They're a Bitcoin native firm. They announced putting stretch on their balance sheet. And then the other big one was Prevalon Energy. They announced not only STRC on their balance sheet, but they announced an 8-figure position with plans to grow to 9 figures in STRC. And the CFO did a great job on the little presentation that he put together. But his story was, kind of the same, same experience that you and I've had, right? Is whether you're trying to pitch a client of putting Bitcoin on the balance sheet or diversifying your reserves or a portion of your free cash flow into Bitcoin, the first thing we always get is the volatility objection, right? Well, that aside, like STRC basically makes the volatility issue moot, right? And it shifts the conversation to my treasury strategy is not just dollars and Bitcoin. My treasury strategy is now dollars, Bitcoin, and stretch, right? So whatever that combination is specific to you and your situation, but you're going to see this treasury strategy evolve for operators like West Main and really all businesses, small, medium, and large, where I can see them having a tranche of spot Bitcoin, right? And that's the long-term bucket. Maybe that's 25-30%, right? And then they're going to have maybe 40 or 50% of STRC, and that's their short and medium term bucket. And then their immediate needs, whatever that remaining portion is, 10-15% is going to be US dollars, right? And that's for the immediate operational needs, pay your vendors, pay your employees type of deal. So it was just kind of cool to not only see that come full circle, but also to see other businesses, right, in different industries kind of thinking through it the same way and utilizing it in a similar way that we've been talking and thinking about it in from a real estate perspective.
Yeah, no, it's definitely good to see other businesses implementing this strategy, right? Because when you're in the early days and you're doing this, you kind of got to think deeply. Like, am I crazy? Like, is this what am I doing here? And when you see other players, that are larger than you come in and follow and do the same thing, right? They're putting stretch on the balance sheet. It's like, well, maybe we're not crazy here. Maybe we're just early. I mean, that's been kind of a theme here is being early to the technology, being and the small operators. That's where you see the first mover advantage. Even though these companies that you listed are bigger than us at West Main, they're still on smaller side when it comes to publicly traded companies and
Absolutely.
the larger players. So you see the small guy go first, and then you start seeing the medium sized companies moving in, and then before you know it, you're seeing publicly household name companies on the stock exchange holding a significant portion of their free cash in these instruments, right? Like Warren
Yeah.
Buffett has got Berkshire Hathaway has got 350 billion or something crazy just sitting in cash. I mean,
Yeah.
what like he could put a percentage of that into to Stretch and have um, you know i- insane gains. Um, So
Yeah.
I think it's like we're like living through the hyperinization of Bitcoin, and this is kind of like the middle ground with digital credit. And this is what we were talking about just a few weeks ago. Like maybe digital credit, digital rents, digital yield. It's not just black and white. It's not one thing like you were saying earlier. Like digital rents for us is the difference in the cost of capital and the yield that we're generating from the digital credit, right? And what we get to take home and put in our pocket, that to us is the digital rent. Um, and then it comes down to what are these companies going to do with that digital rent? Are they going to drip it back into strategy, stretch, or are they going to buy Bitcoin with it? For us, the name of the game for us is to accumulate more Bitcoin. So when you think of companies becoming Bitcoin operating companies, they're using these tools like Stretch to be able to buy more Bitcoin. Right? And that's where we're going to start seeing all these different alternatives really pop up um, with these companies. Now they have a new income stream. What are they going to do with that income? Is it going to go to R&D? Are they going to allocate it to AI? Are they going to buy
Yep.
Bitcoin? How are they going to deploy that cash flow? Or are they going to drip it back in? And so,
I think it's all the above. I think it's all the above, and the answer to that question, in a moment of time, is going to be, dependent on what their situation is. What are they working on? Do they have some big initiative, some new side project that they've either been working on or wanted to start? Right. I mean, when you have not only a new income stream, but you have an income stream that is paying, double digit percentage yield in in the environment that we're all used to the last 15, 20 years plus, it's meaningful, right? And it creates a lot of optionality in how you use it, how you do business, all of it. So I'm excited about it. I've said in the past that one of my favorite things about being in commercial real estate is seeing and understanding all the different creative strategies that people apply to real estate properties, right? And now this just opens up an entire new new little Pandora's box of what that looks like and what it means. So it's super exciting. So, and I don't want to maybe beat the strategy world here much more, unless you have any comments or additions, guys. But maybe we pivot to heat punk.
Yeah. What is that, Chris? What
I'm
was it?
so glad. I'm so glad you asked. Yeah, Heat Punk Summit in Denver. It was the second annual summit that they put on, and it's held at the Space in Denver. The Space is similar to a Bitcoin Park or in Nashville or Bitcoin Commons in Austin. It's just their local kind of Bitcoin hangout co-working environment, and this one is very very specific to the mining space. One of our strategic partners, if you will, that Kenny and I have talked to in the past, on integrating mining systems into building mechanical systems from an energy perspective. Their name is Exergy. They had put it on, and they did an incredible job. They brought together, I think there was 190 attendees. Again, primarily mining focused, but from all areas of the industry. There was the software technical guys. There was a number of engineers, technicians, and real estate guys. There were a couple home builders, some developers, and investors, and it was just a really nice venue to put on the discussion and dive deep into the energy conversation specifically, because we've chatted in the past about the importance of being energy efficient with your real estate, as one of those four pillars of being competitive and profitable as we get into the back half of this decade and into the 2030s. So if you can integrate mining into these building systems as a way of being more energy efficient, reducing costs, and subsidizing the energy consumption, but also in some circumstances creating a new revenue stream, that's a transformational change, right, for the better. And all these different folks that were there, they had different vantage points and different thought processes on how to do it. There's definitely more applications, Kenny, in the residential space right now, but the commercial space is not far behind. I'd even go as far as say it's kind of nipping at the residential heels, so to speak. There was some good conversations that I got a lot out of, that I kind of learned kind of where some of the gaps are. And it's not just, I mean, I know you and I've talked in the past about it being like the cost of power, right, in the particular jurisdiction you're located in. But another thing that came up was when you integrate the mining into, let's call it an HVAC system, right, having that system talk to the existing BMS, the existing building management system that controls all the other systems in the building, right? There was a lot of really good technical talk. Quite honestly, it was a little over my head, the more technical they got, but it was really interesting to see how the engineers were thinking about that, right? And then how the on-site technician was thinking about it, and the questions he had as far as, if I go to this facility and service this issue, what's happening on the back end, right? So just to see in person how people are thinking about that entire little supply chain, if you will, was really, really insightful. It was really valuable to see that, because, I mean, quite honestly, that was the first time I've seen it, from point A to point Z in real time.
Oh, that sounds awesome. I think that there are, you know, opportunities to kind of build that in. Where we're located, I'll kind of, reiterate our stance on it. We just had higher buyers of higher, like, people willing to pay more for the electricity. So when you hear people in the Bitcoin space say that, Bitcoin uses stranded energy and is like the buyer of last resort, like, that's because typically it's paying the least for the power. So if you have an opportunity to sell it to sell the excess power that your facility can generate to a utility company, they may be willing to pay a higher price in some locations. In other locations, they don't pay as much, and it may be more competitive with Bitcoin. I know in places like Texas, power is relatively cheap. Um, so you get kind of closer to the price of that the Bitcoin network can pay for the power, but you have the added bonus of heat. So if you're doing some kind of radiant flooring, or you're doing some heating in some areas of the house, or maybe you have a greenhouse, or maybe you have some chickens or something going on. you can use that excess heat to get like two birds, one stone kind of benefit there. But I think it's great, and I think as it's built to HVAC equipment, like you're talking to, like it's going to get better, where you can kind of like flip it on, flip it off, and it integrates with the whole building system, like you were talking about. Then it becomes harder to ignore. When I think a couple weeks ago you were talking about the guys. I don't know if I was talking with you guys about them building it into water heaters. I think you were mentioning that they were,
Yep.
there's a company building, and so when it becomes part of the actual equipment, then it's like you're buying a water heater that has this capability. It becomes easier to implement. So I think this is all good for Bitcoin in general, but Bitcoin has some competitors when it comes to energy. As we know, AI is an energy hog as well, and we just saw a mining company. I think we talked about this too. BitDeer, they sold all their Bitcoin, and they're going to transition into, from what I've heard, into more of an AI company. So repurposing their data centers from ASICs, application specific integrated circuits, into NVIDIA graphics cards. They're going with the shiny object, right? They're chasing the dollar signs because AI is currently paying more than the Bitcoin network. And I don't think that will always be the case. I think that a lot of this AI is we're seeing capex go up for these big tech companies, and they're subsidizing the cost of it, right? And they're overpaying for the electricity to get first dibs on the new power generation that's coming online. And anyone that's been paying attention, the U.S. hasn't been doing well when it comes to new power generation. China's kicking our ass when it comes to new power generation. So they're bidding up the cost of that electricity. I'm kind of going on a tangent here, interrupting whenever you feel
No, I
like it.
mean, the just kind of bringing it back, the space, the facility that this event was hosted at, they've kind of made it. They are a model, right? They're proving it out. So they have the radiant flooring component, right? The heated floors. The building itself is heated with Bitcoin miners. There's two of them in a nice metal um, container outside that's piped into the building. And then, of course, they have the Bitcoin heated jacuzzi in the backyard for you to enjoy at your leisure. So they like it's there, and there was a really good conversation about from the engineers and the builders and like just the technical guys to like a couple of the developers and myself, as far as like, okay, we're on the back end, we're thinking through the weeds here on a daily basis. You guys are on the front end, interfacing with the end user, interfacing with the cities, interfacing with the tenants. What do you guys need from us to help this process go along faster, right? And a couple things that came out of there was standardization, right? Having the specs for these systems, what they need, how they should be installed, etc., so that you can then take those plans. Um, they're systemized in a way that you can take them to a city planning department, make them part of your plans, and it's smooth, right? It's seamless part of the process. So that was one. The other thing was, how do you pitch this to your average real estate owner, right? And the answer there was the commercial clientele, they want to know, one, what the benefit is, right? That's the biggest thing, right? What's the benefit? How much time is it going to take to do the install? And how much is it going to cost me? Right? So that is what guys like you and I need on the front end here as operators and advisors to these end users, Kenny. The engineers, the technical guys on the back end, they can geek out about the technicals and get into the weeds all they want, right? But in order to further this part of the industry, we have to simplify. You have to abstract away some of the technical things, and just be able to give them that one really cool, sleek, simple one-page document that says, here's the problem we're solving, here's how much it's going to cost, here's how much time the install is going to take, right? And one of the things, this is, you'll actually appreciate this, Kenny. I was able to, I wove in Satoshis per square foot into this conversation, right? It's like,
Nice.
real estate operators need a metric, right? That they can use as a comparison tool for the property, right? Just like we're using NOI and dollars per square foot and debt service coverage ratio, return on equity. We need to understand what the heck this fancy computer is going to do to the property, right? And if we can use a metric like sats per square foot, right, you're going to need one machine for every X number of square feet. That one machine is going to produce X number of Satoshis per square foot, right? So now the real estate guy that knows my expenses on this property are whatever it is, $20 a square foot. Chris is saying that this machine is going to add $5 a square foot. That real estate owner just did that really basic arithmetic in their head, and they know, hey, this is a net positive move for me, right? And that's before I factor in the tax benefits and the depreciation, all of that. So that was probably the most fun conversation I had with some of these guys, Kenny, was that, right? How do we take it from concept and garage hobbyist tinkerer to commercial application at scale?
Yeah, you got like I was just kind of thinking when listening to you and just kind of, I was drawing similarities once again to the solar industry. Um, what really took off for like home installs and even commercial installs was having like third party solar companies that would come in and they would offer you two options. They would offer you they'd give you a price if you want to own the solar array yourself, and they would install it for you, or they would offer you a second option where they would own the solar array and they would sell back the excess energy to you at a discount, and they would create these power purchase agreements. And so what happened was, and there's a lot of third party owned solar operators out there. But what happened was property owners were like, hey, wait a second, if this guy is willing to lease my roof or lease a portion of my yard or like do this deal, this might be worthwhile for me to do on my own. And like when you have those two options, it gets you thinking a little bit more. If nobody's willing to be like a third party operator and mine the Bitcoin and get the depreciation from the machines themselves and then give the landlord a kickback, so to speak, like a rent payment, then it just doesn't seem worthwhile for the property owner to like, why am I going to do it if nobody else is going to do it, right? Like, and I think that's what the industry is missing, is like a third party operator that's like, hey, let us park these machines. Let us. We got these containers. We want to park it in the back of your property, and we want to sell you the heat. And that may cause other. How do you integrate with heat? How do you meter the heat? How do you bill for that metered heat?
I'm glad you brought that up because you hit it on the head. That was another big discussion point at the summit, was all the different, and this goes back to what we were talking about earlier with Stretch and all the different, optionality it creates, right? As far as use cases, this is the same thing. A big part of the conversation across all these different professionals was there was a lot of different ways you can structure it where landlord and tenant benefit from the Bitcoin production, right? You can even go as far as landlord, tenant, and the installation entity are all participating in that SATS flow. And just one final thing I want to share about this particular summit before I want to hear about Kenny's OpenClaw excursion here. But just to make this a little bit more tangible for the real estate guys out there, is there was a developer that was at this conference with me. He was on my panel with me, and he was sharing his story. But there is a small town in Colorado, a couple thousand people max. There was a building in their town that was kind of the centerpiece of the community, and it had burnt down a handful of years back. And this developer partnered with the landowner to not only rebuild the structure, rebuild the building, and get it operational again, but they were looking at creative ways to integrate Bitcoin into this new building. And they basically settled on using Bitcoin mining as the Bitcoin miner boiler to operate the property, generate the electricity, all of that. So that is moving full steam ahead. They broke ground recently, a few weeks ago. So their construction will be done, in about 12 months from now. So that is in motion. It's a mixed use building. It's got ground floor retail. It's got some office space. It's got some residential units. So I feel like a lot of the time on this particular topic, we're talking very theoretical, right? Which, in some cases we are, but it's not just theoretical. These are real world applications that are available today if you are, a forward-looking operator that's willing to spend the time and explore how you can integrate these things into the building, whether it's an existing structure or a brand new build. I'm really excited to, stay in touch with this guy and this gentleman and see how the project unfolds. The community is on board. They're going to accept Bitcoin as a form of payment, a medium of exchange at this building. So that's another really cool angle for them. So again, I just wanted to kind of conclude with that to add a real world practical example here, because again, this is not theoretical. This is coming faster than most people believe it to be.
Yeah, I would second that. It's great to see some of the stuff coming to life, because it's been theorized for a while, and now it seems like there's some players in the space that are actually building it out.
Yeah. All right, Kenny, why don't you give us a rundown on your OpenClaw and how you're going to put all these real estate professionals out of business?
And Kenny, can I just jump in here? I just sent both of you, less than an hour ago, Hunter Horsley posted on X, 2026, crypto and AI are going to intersect much faster than people expect. And he's quote tweeting Eric Voorhees, who said, Venice is now the recommended model provider for OpenClaw. So an hour ago, before Kenny and Chris and I were talking, I didn't know that OpenClaw existed. I know who Eric Voorhees is. I know who Hunter Horsley is. I don't know what Venice is. Over to you, Kenny. Can you break it down for the 99% of people that have no idea what Venice, OpenClaw, or any of the rest of this is? Like, I've heard of Chat, Claude, Gemini. There's a fourth one in there.
Yeah, there's a bunch of them now. I haven't personally used Venice, so they must either be like an LLM or it's something like Cursor, which is like basically a large language model manager, so to speak. So with Cursor, you can select, and just like OpenClaw, right? OpenClaw is an agent in which you can set up and you can choose which LLM is powering it. So like behind the scenes. And most people will use Anthropic's Claude, or they have several models. Opus, they're on Opus like 4.6, and then uh, OpenAI has um, their models. They have ChatGPT, and they've got a whole bunch of different ones. Grok has their own models. Elon's Grok. So after last week, or a few weeks ago, what was our last podcast, we were talking about like, oh, AI is going to you know, intersect with real estate and Bitcoin, and we were talking about all these things that were going to happen. And I saw some guys that I follow in the real estate space. I don't want to put them on blast, but they were basically trying to dunk on the AI guys, much like they do on the Bitcoin guys from time to time, saying that there's no real use cases for these OpenClaw agents, and get back to cold calling and doing work, and not like trying to look for a shortcut. So that kind of like struck a nerve with me, and I was like, well, I wonder. And I hadn't gone ahead yet and created my own agent yet, and I was like, you know what, might as well do it. I was kind of waiting, for a reason to try it, and so I ordered a Mac Mini and I got it set up. I set up an agent, and over the past week, I started giving it different skills, so to speak, in which it can, things that it can do. So it was kind of like building from the ground up. So I had to give it an email. I had to give it. It came with all Apple devices give you access to iCloud and iMessage. So it had those things. It has like the ability to iMessage other Apple users. So you're in the Apple ecosystem, so to speak. So it has email, and then the iMessage, and then the next thing was, well, let's get it a phone number. Let's get it a voice over IP, a VoI, a VoIP address, VoIP number, so it can take phone call. Let's give it a voice. So there's these other AI services like I think it's 11 Labs or something that I used, and I gave these agents. There's multiple agents voices, and then I started giving it markdown files in which you basically give these agents a soul or a persona, so to speak. And so I created one that can gather from the Google Places API, can gather a list of self-storage facilities in the states that we're interested in potentially maybe buying some more facilities. So I targeted to California, Rhode Island, and Massachusetts just for this experiment. It pulled in just under 1,000 facilities with their address, their phone number, the point of contact, the email, their website, and with a click of the button. I haven't done it yet because it's kind of shocking, and I've been testing it on myself and family and friends. Maybe I'll try it with you guys. I'll stick the bot on you guys next, the agent on you guys, and see what you guys think. But it is capable of making like these robocalls, but it's a lot more human like than what we've seen in the past, right? Where you can definitely tell some are robots. These ones are kind of 50-50. Like it might trick some of the people out there into thinking that it's human, because the voice has just been really ironed out with some of these third party tools like 11 Labs. But I'm gonna try to like shorten the story because I can drag things out for a while. Um, Basically, give it all these abilities. It has its own GitHub account to deploy code. It can build websites. You can message this thing. You can talk to this thing. So I've transitioned from being in the prompt bar or in the terminal and talking to this thing, where now I just I call the agent, and I'll have a full 5-minute conversation, let it do its thing. It will message me back when the revisions are done, or if any pull requests are needed, and you deploy it and you can go test it. And I mean, from somebody that was at like a very beginner level, like developer, knowing HTML, CSS, and JavaScript, and not really going much further into other programming languages, I feel like I can orchestrate a team of developers, a team of sales representatives, a team of marketing people, um, cold callers, and you become it gives one person the ability to become like an orchestrator and have agents and sub agents go out there and accomplish tasks. And you can kind of create these, you can create like a living document, so to speak, with things on the agenda, and one by one you can watch them get knocked off in real time. So
Can I jump in here, Kenny? Because I love this.
I got
I love what you're
questions too.
doing.
I've got questions too. Go ahead, Chris.
So well done, by the way. I have not started doing this myself. It's on my to-do list, but I have been following it very closely, or as closely as I can, since it's been going on the last 3-4 weeks, whatever it's been. And the progress that's taken place just in that 3 to 4 week time span is absolutely staggering. So, two things I want to say here for the naysayers, the real estate naysayers. One, the real estate operators that apply these tools, they learn them, they start integrating them into their workflows. They are going to run circles around those that don't, and the ones that don't will not be in the commercial real estate business for long, right? I mean, and I'm bullish, but you're talking 3 years or less. You're gone if you're not using these tools. Okay. Second thing I want to say here is the situation you just described, Kenny. This might be a little bit of a longer time horizon, but it's still in the line of sight. What you described here is massive, because what you're talking, like, you're going to have users, right? Tenants, investors, the end user that hires a commercial real estate professional, right? Today, they're going to have done 90% of the work before they call their broker, before they call their property manager, before they call their investors, right? So in the US right now, there's about 100,000 commercial real estate brokers, just roughly. By 2030, in the scenario we're talking here, I'm going to say there's 25,000, maybe 30,000 commercial real estate brokers. And the ones that are left are the ones that are using these tools, right? And the clientele in that world, right? They've done 90% of the work before they pick up the phone to call their advisor. They're not paying 3, 4, 5, 6% fees on deals, right? So not only do you have a massive percentage of the community that's going to get washed out, right? But the ones that stay, there's going to be massive fee compression. The other thing that I'm thinking through is, what is the role of the advisor in that world, right? Like, I can see this going where your bot, Kenny, is talking to my bot, right? They're doing the negotiation, they're providing the recommendation, and me as a broker, as a service provider in that world, I'm managing the human relationship on the back end, right? If Tim's my client, I'm just, hey, Mr. Client, hey Tim, here's what's going on. Here's the recommended terms based off the bot. Here's the risk profile. And I'm getting that last 5-10% of the deal over the line, human to human, right? But in a world where the bots and the technology are doing 80-90% of the work, if you don't think there's going to be fee compression in that world, like, just, you don't have any business being in this world to begin with, right? I mean, that's basic supply and demand and market dynamics at work. So I know that was a long-winded rant, but
so I'm the client, because I was going to say, what about my bot? I don't have a bot.
yeah, we're going to have to get the Bitcoin treasury bot going. I think you guys should have one. Yeah.
Maybe you're the baby boomer client, Tim, that doesn't like technology, right? I mean, just think about it. You think about the ownership concentration in that baby boomer cohort, right? They're the ones that own all the big properties. They have all the wealth, right? My dad is not, if you told him to go create his own bot or someone was even going to create his bot for him, the likelihood of him using it is slim to none, right? So there's still that human component that's required. That relationship is going to go a long way. But if I'm competing against a guy that's not using it, I'm going to run circles around him, right? As far as the flow of information, the quality of the advice, the
Yeah,
analysis, et
I
cetera.
think you understand it pretty well. It's not like humans are going away, right? Like you need to have a human that is managing those agents. I keep saying bot and agent interjectedly, but you know, you need a human that's going to oversee the agents. And you can have agents oversee sub agents, and there can be turtles all the way down. But at the very top of the hierarchy, there's a human that's like the orchestrator, right? And they're the one that tells the highest level agent what to do. And just like you said, there's going to be times where human intervention is needed. So
Yep.
you have your agent, I have my agent. They're negotiating, and that's something I've been working on with my agent right now. Is actually, it's a very it's like a MVP, a minimal viable project here at this point. But if you answer the questions when the agent calls you and says, "Hey, Chris, like, are you the owner of this storage facility?" and you say yes, and then say, "Well, do you mind if I give you an offer on the property? Are you interested in selling it?" And you go along with it and say yes, yes, and you answer the questions and say, "Yeah, it's 69,420 square feet. It does $740,000 in net operating income. It's 480 units, all climate control, multi-level." Like, you answered the questions, and it's very like an organic human conversation. When you answer those questions, it's capable of then giving you a preliminary offer and like building a website for you and sending you a link, a URL that you can click on, and you can like see it. And if it's a number that you like and you want to go to the next step, like, you can say, "Hey, this is something I'm interested in. Like, let's schedule a phone call." And that's when a human would come in. But you can automate the cold calling. You can automate the initial underwriting. You can automate the coordination. Like, you can have them pick a time on your calendar, or like schedule a callback, or schedule
You're
Google.
you're just, I mean, you're making the point, right? I mean, you don't need a team of 30. Full stop. Right? You need you, maybe me, and an army of bots to not only get the same work done, but do it at a higher quality output. So
Yeah,
I think that's
hopefully we
probably
will
a good.
do.
I was go finish your thought.
Yeah, I was going to say, hopefully, we'll talk offline, and maybe we'll do another episode at some point, whether it's a special episode set aside on this stuff, or if it's part of the real estate standard. We'll continue this conversation, because there's so many different paths we could go down, and not enough
Yeah.
time today.
Yeah.
But Tim, did you have another quick question, or?
Probably. I'll have to save it for next time. But I did
Okay.
want to ask Chris, based on your last comment, did you? I was sitting right behind you at the last session of the strategy Bitcoin for Corporations conference, the Q&A, where Saylor said, basically you can be going from teams of 5 to teams of 2 with an AI, and he kind of like went through, right, the executive, the analyst, the attorney, the accountant, the specialist, or whatever it was, to like the executive, the specialist or analyst, and an AI, and that's it. And I think he got a chuckle out of the crowd when he said, I don't want to think of it as just one person with an AI, because that's a little lonely, but maybe 2 people. I thought that was humane and made a lot of sense, because even with AI, it's always nice to have somebody there, like the power of 2 sort of deal.
Yeah, I
That's
think
right on the money.
that's right on the money, and I think that's a great place to wrap it. So why don't you bring us home, Tim?
All right. Thanks everyone for watching and listening. Episode 10 of the Real Estate Standard Podcast. If you enjoyed it, please share it with someone. Please like and subscribe and do all those things you're supposed to do on social media. And we will see you next week right here on the Real Estate Standard.